Recommendations regarding the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Yeah. Welcome to the Foundation for the Study of Cycle. We have Monday, we have Cycles TV, time to spend some time on cycle analysis. My name is Lars von Thienen and welcome to another episode analyzing cycles. I have prepared 3 topics for today. So I will revisit the global stock markets first. Second, I will start with the long-term cycles on the S&P 500. Nothing new, but we always need to ensure where we are in the long-term cycle. Second, related to the stock market, I found a very interesting idea published out of the community in our ideas section. I will pull that up. So to dedicate some time to ideas out of the cycles community, we will check the composite cycle. I will show you how I would continue with this analysis on my own. But it's actual daily data. So we have long-term daily data. And at the end, so stay tuned, I will show you a special idea in that context, which I think is a very interesting asset to monitor at the end. 20 to 30 minutes, as always. I pay attention to your questions. So feel free to ask me anything. I will decide what I will answer or what not. No, but just kidding. But you know me, I always try to turn to your questions latest at the end. So let's get started. Let's start with the long-term cycles situation in the stock market. We use the S&P long-term. No, that's not the one. That's also not the one. So let's start with the weekly. Sorry for that. Here we pull up the weekly S&P 500. We can zoom in. We have this up move here. And if you are a follower, you will know about that. So I will make this very quick and short. We have one key cycle with a length of 180 weeks. The 180-week cycle we are monitoring and watching for a long time here on that channel. And even, this is related to a 41 months cycle, which is also very prominent. So we know from different analyses that this cycle is a valid long-term cycle. I pull it up to show it as an overlay on the chart. And you know that we are in this upswing phase of that cycle. And I talked a lot, so this low seems to be the key low of that cycle, even though it's coming in too early. That's why through the summer I was even very, very hardly monitoring maybe another pullback, which we have not seen. And now latest we have received the confirmation that this upswing cycle is in force. And when I'm talking about what I mean by confirmation, this is the concept of future line of demarcation, which is just an FLD. I will plot it forward here by half of the dominant cycle length. So by 90, 180 is the dominant cycle, plotted forward by 90. This is the green price shifted forward. Nothing special, very simple, but a very powerful technique introduced by Hurst. And the interaction between price and the FLD line is what we need to watch here. And during this period here, so during the whole summer, price stayed below the forward shifted FLD. So all the time through the summer, we did not have confirmation based on the FLD concept. We received this confirmation end of October. Early November, so 1 month ago, the price crossed the FLD from the downside to the upside, which at this given point in time is a confirmation that this upswing cycle, which from the Cycle Explorer we are expecting or forecasting anyhow, but until we do not cross the FLD, this cycle has not been confirmed. So these are two techniques which in combination are very powerful, because the dynamic cycle is projecting time-related information. Yeah, and the FLD concept now is confirming the cyclic timing information, and by that cross, it shows us that the next half of this upswing is to be expected. So it's not as perfect, but we can count. So theoretical, we have now passed half of that upswing from a timing perspective here. So this crossing means now we have passed half of that cycle length. So sorry, I've maybe shown it in the wrong way. So that we have the same time maybe now also from that point here to the left side to travel time-wise and price-wise. We have the same amount from the key low, which is here, to the projected to the upside somewhere here at the top. It's not quite exact, but this is the timing information and price. So we have price and time given by that FLD, and we have here the top of the dynamic time cycle. So that's the combination of these two. Nothing new. I've talked a lot on that topic here. And as we now have the confirmation, it looks like, and that's a nice forecast for 2024. So you're all preparing for next year. And based on that long-term cycle, it now really looks that we have passed the transition. So let's close 2022 was the downswing phase here with different cycles pointing downward. 2023 was, I think, a hard year, but now we have the confirmation, it's more to the upside. And now 2024 could become another year to the upside. So looking forward, this sounds very interesting. However, this is the weekly cycle, so we need to push to the shorter term cycles. Let's just have a quick look at the cyclic RSI, which, by the way, we also see that there's enough room to the upside. So we have touched here this low again, and we had the key indications at these 3 points here. So here, we had the buy, the second buy, the third buy, and maybe this was no more the fourth crossing buy signal. So, and you see we have now room to move the signal line above the upper band. So the timing information is also confirmed by the cyclic RSI indicator weekly data. So, that's just a short summary of what I've shown here a lot of times. Yeah, Star-Lord, I see your question. So I want to quickly revise or get back to your question. So there's the question out there, how to project the target based on the FLD 5700, the cycle monitor that the kilo is 3000. And let me explain it because it's an important question. So maybe I have been too quick. Let's get back to the chart here. Let's clean it up, and let's also make it a little bit larger so that I can explain the full outlook here, how this should be used. Okay, so here now we are. So the question is how to use the concept of FLD. Again, let me get a quick summary. So we have the crossing here. Yeah, so that's the point we are looking to. Here we crossed. So the reading is the following. So we have here the crossing, and then we measure from that point to the past key low, which is here, I think 3.6. So then we measure that that distance here. So in that case, yeah, I see your question. I think there's a different, as I've shown. So we are trading while the crossing was 4.4. So the amount of distance traveled was around 800 points, just very roughly. So what you will now do, you will add the same amount on top of that number here, which then will bring you to 5.2. So that's the rough estimation, so that you will receive the possible target of 5.2. Yeah, so that's the, if you just do it manually, that's the first version. The second version would be that you use the low here, yeah, from that key point here. But I agree that is not feasible. So you're referring to that calculation here in the upper left. And the FLD kilo is here anchored to 3009. It looks like it's going back even for a longer time here. So that makes no, yeah, it's this low here, but this is not a kilo. I mean, you see I'm hovering. This is exactly the point which has been used, but I think this is the wrong point here. So that makes no sense to use that level here for that calculation. So you have to use this low here. So Starlord, very good question. Thanks for bringing that up. I think if you do it manually, you should not maybe trust the fully automated version. So we need to improve the FLD calculation. Thanks for raising that up. And you would come to 5,200 would be the target using that. Okay, that was related to what I've shown here. Second, I wanted to now turn to the next lower time frame, which is the daily time frame. And therefore, I want to start with an idea out of the community and want to pull that up. So therefore, let's bring in the community section. You can all visit that section by going to app.cycles.org/ideas. And I've just learned that if we scroll down a little bit, there is the let me scroll to the where is it found? Here, that one. So this is the study posted by Chris out of the community. Strong best test confirmation from his perspective. So let's pull up this idea here. And this is the daily analysis of the S&P 500 based on latest data. A lot of cycles show up in the spectrum. And the user here shows now an interesting selection of a composite cycle. So I cannot finally explain why exactly this combination was chosen, but it sounds like with backtest confirmation. I want to have a look at the outlook of this cyclic projection. This is why I wanted to pull this up and explain a little bit how I would, start and extend that analysis from my perspective. So first, if you have the overarching trend, it shows you also then some minor cyclic swings here from a shorter term cyclic perspective, but the most longer term cyclic daily perspective also looks a positive period into March or first quarter next year. Yeah, that's the short term outlook we see here. What I pull up very often, and I just can recommend that also to repeat that, is another visualization, which is the energy model. I will show you in a second. I will just enable it. I just have to click on the exact cyclic combination, which was picked by the user, to bring that up. And here in the lower section, you can now spot this so-called, what I call the energy view. We can also hide the spectrum view to make this even larger. You need to be careful here with aligning the timeline, because this is not the same timeline as here. So this starts with today. So the gray period is the past, yeah, and this is the first data of today. So this point here is also that point here. You see it at the bottom. I think it's not visible here on the screen. Let me show you that for sure the timeline is there. If we scroll down, yeah, here you have also the timeline. So this is December. This is where we are today. This is exactly the same here. So it's visually not synced. But what I want to show you is the level of energy which is coming into the asset under review here. And you see the energy level by the smaller cycles here and here is very low compared to what you see later here rushing in February. And I often realize that this small changes in cyclic energy, so the amplitudes of these cycles are quite low. So due to the fact that the high amount of energy caused by the higher amplitude change here will only show up February, and often it starts already when this cycle is going to phase out. So this is end of January, beginning of February, and then a huge positive energy based on this composite cycle model. So I would more or less ignore the light changes from positive to negative or from negative to positive here. So these cyclic changes which relate to these ups and downs here are not as important as this upswing here, which is then following. So it looks like we are closing, or we are in the end of this upswing energy cycle, which has pulled the markets up here. By the way, always keep in mind, you need to set this into context of the long-term cycle now pointing upward. Yeah, and what this would mean is that I would look out now for the upswings of this. So this upswing here in the context of a long-term cycle really pushed up the markets a long time. So this period now from here to here, yeah, where we have that small negative energy, maybe I would at least not really make short trades in that period. I would watch out maybe for January, when another positive upswing, just a small amount here. So we really need to watch the technical condition in that period here. Then maybe ignore or sideways move here, and I would watch out for this point here, early February. Early February is exactly at that point in time to be positioned when this energy is released by that upswing cycle for another upward push here. So that's just a different view how to look at this composite cycle model. In the end, for sure, we're looking at the same cycles, but the view of energy and how the energy is unfolded and flowing into the asset class gives you an idea of the relative difference of the different cycles you are combining in your cyclic model here. So that's where we really want to look out. Long-term cycle positive. So now maybe I don't know if we will see a sideways move into January, February, maybe a pause of the upswing we have seen now, and then maybe in February another big upswing projected. We don't know, so we need to monitor the technical condition for sure at that point in time. So by bringing in the technical situation also, as always, we can turn on here the cyclic RSI. This is now the daily, yeah, so that's the daily cycle here. So could become a perfect situation here from a timing. That's just timing. They do not relate. This is the timing window. And if we see now a crossing above the upper band and maybe a turn below, so that would be a point in time to be careful or at least expect the upswing here to pause for a moment. And the ideal scenario based on that technical indication would be, I don't know what the signal line will do here, but at least at that point in time, I want to see something like this. Yeah, so let's say that's the band here, whatever it means. So if we see this moving to the downside and then a push upwards at that timing point here, early February, that's the perfect situation we could plan for into January, February. Yeah, and by showing that, I just want to repeat that cycles often offer us a view into the future, or it's a window into the future. It does not mean that this will happen. Yeah, always be careful. It does not mean that exactly this will happen, but this is one option and a kind of window which gives you a kind of view into the future, and you know what you are watching for. So you're looking out of the window and you are now exactly have in mind what you are looking for outside. Maybe it will never happen. You will not see it outside, but if you see it, you know that now this is the perfect situation which we have forecasted. So it really helps you to prepare. And this is also a topic maybe I cannot emphasize enough here. Cycles offer this guidance so that your mind is prepared. The road you're looking for, you're not surprised by when something happens like this here. So you can really lay out your plan now, how you, if this is now the scenario which will play out, you can really now write down what you will do if this cyclic projection will take place. So you can plan accordingly. And if you see confirmation of that forecast, I think you are well prepared then to derive your decisions. So that's the long-term and short-term market outlook. I think that's why we are here always. So it's interesting to have an update on this. And last but not least, I promised, so stay to the end. I will now show you a special opportunity related to that condition. And the reason I'm bringing this up is that, we see that the S&P 500 is, we have the companies there, so the Magnificent Seven, which drive the overall index now for the past year. And we really have different sectors in the S&P 500 which perform different. Yeah, so just looking at the overall cycles in the S&P 500 maybe will not help you to trade successfully. So we have learned in the past year that cycle analysis need to be drilled down into individual sectors. This is also a lesson learned from me in the past year. It's not enough just have a view on the overall cycle, because we learned different sectors, different groups of companies could perform quite different. So we know that the small caps are in a downward phase, while these just 7 big tech companies have pulled the overall market up just because they have so high capitalization in this S&P 500. So therefore, and this is what I would recommend for you, if you now want to prepare for the roadmap I've shown, which you could expect, you should look out for assets which, if you're looking for the upswing, maybe are positioned for a good trade opportunity now to ride that overall cycle, instead of just trying to capture the overall scenario, because it's quite diverse due to the different market capitalization. But long story short, let's review a chart which I will bring up and explain you what this is about in just a second. So, but before I tell you what I'm talking about, let's do some basic analysis. Right now, it does not matter anyhow what the name is, but you see here this asset and sector which I'm reviewing is in a continuous downward phase through the whole year of 2023. Yeah, so and it's an asset class which is also there. So you don't see the turn to the upside as we've seen in the S&P 500 or the tech index. This is since the big cycle top here at the end of 2022. So let's see, let's even zoom this in here. So this is the big top in 2021. So then we had the short upturn here, and then, but I mean, even since then, this is the 180 weeks downward cycle here. So this is, if you have in mind, so this was the overall long-term cycle which bottomed here. Maybe it's not a good one here, but I just want to mention we don't see the upswing here yet. So if we now think about that the market conditions of the overarching theme has changed, so the 180-week cycle has now bottomed and is pointing up, this will also pull the other asset classes also to the upside. So we should look for these asset classes which are not already in the strong upswing, which will come later to the party. And this is one of those, I would expect, where we have an interesting opportunity. So therefore, we see that's the 200 days cycle in that asset class right now. And if we pull the stream is coming back. I'm really sorry. I needed to restart the network stream now. So I didn't monitor that quite closely. So I'm back again. So I'm really sorry for the interruption. And thanks for pointing that out, Andrea. And thanks for bringing that up in the live stream. Okay, I'm back now. You never know in these digital areas. I need to repeat a little bit because I'm not quite sure where you left the analysis. So let me get back to the asset under review here. So I wanted to showcase a scenario with this asset now here under review, which has a long downward timing period behind. And if the long-term upswing change now, which is seen in the global stock market, this should also maybe then swing into that asset class here and then start another up leg in this asset under review. And I will tell you what we are watching here in a second. And in addition, this short-term cycle is now indicating that an upswing really started, while at that point, also the long-term upswing cycle started. And finally, I just pulled up the cyclic RSI indicator, which just pushed the first time. I mean, and that's interesting here. So the first time it did not post any signal through the whole year of 2023. Yeah, and that's really the beauty of this kind of signals. So from a technical perspective, we hovered here, we just went lower. The first time now for over a year, we had the first time we see a buy signal in that asset class with the short-term upswing cycle into the first quarter of next year in the time period of the long-term 180-week cycle. You got it? So now you just want to ask me what asset class we are seeing here. This is the global clean energy index or sector. So the global clean energy ETF, you can also trade it, and we are monitoring the price as ETF here. I think it's listed in the Yahoo Finance as ICLN. So you can pull up the index here, but it's the global clean energy sector class I just pulled up here. So that's an interesting idea. So you maybe don't need to wait until February, March next year when we see it maybe in the global index. maybe here's an opportunity just relate to the short-term cycles. That's it. Sorry for the network issue, but I just learned we are stable now, whatever happened. Yeah, just spending a little bit on your questions. I just see here. Yeah. So Leighton, I just want maybe a short comment. The intraday cycle analysis is there if you have upgraded your membership level. Please open a service request and the colleagues will help you out how to get your data feed synced. And you're right, most important now, you need to sync your data feed from your data source, but it's a feature. So we want to make it easy to bring in your data, because if you're trading intraday, you need to analyze the intraday data you're really trading with and not a data source from something else. So, but the colleagues in the service department will help you out on that. Yeah, the Hurst cycles, the FLD is coming from Hurst, and we could also bring in more Hurst-related data, but it's more static. Hurst has a static cycles model, so can ICRAM. That's why we want to put more attention to the dynamic behavior of these cycles instead of just focusing on Hurst nominal cycles model. There is some more on Hurst cycles into the application. Maybe I need to dedicate a special session on that. Yeah, the William, the 5,200 price target on the S&PX. You can use the same principle how I derive the price target to derive the time target. So you can assume that from the last major low, half of the cycle timing has also passed. So you could also extend that cycle length into the future. And you could use the 180-week cycle from the dynamic time cycle. This will give you the possible timing, and you just can switch back in this video, which then I will show you that timing option. Yeah, that's it for today. Let's just quickly cross-checking your questions. Backfill. I mean, you can backfill data once you uploaded data. Muslim on Wall Street, I just see your question. And if you want to reach me via email, Ruth, maybe back to your question, please send an email to cycles.org to the service team. They will forward it to me. So just name that we have talked in the Cycles TV and you want to reach out for me. So while stating that, they will forward the email to me and then I can decide to answer. But be careful, I don't have too much time to go into the emails. If you want to have your topic addressed here in that session, the best way is join here up front to the start. So I'm always here 5 to 10 minutes before the session starts. Post your question in the live chat right at the beginning, or even 2 minutes before the stream starts, because then I can pay attention even right before or just within the session, so that you can be sure that your question will get the dedicated time, because that's the place where I also want to support you as the community out there. And Leighton, I see you have sent the ticket in, so I will reach out to them. If your synonym as name can be related to an email you sent, I will get back to the service team with your questions. I don't think they are taking forever. So give me a chance to reach out to them, and I hope then they will get back to you soon. Yeah, thanks for joining me again. Have a nice week. Stay safe. Do your cycle analysis, and let's meet here next week